We're going to do here what almost no one on television will do. We are going to call the bottom in the stock market. This print yesterday morning, 402 in the QQQ, we think is the near-term low, and we're going to go through some of the reasons as to why we think a near-term low has been made in the stock market. First thing that we saw that made it look like we've made a bottom, and that is the put-call ratio here. As you can see, we spiked above 1. What does that mean? Well, it means generally people are buying more calls than they're buying puts, but in this case, people are buying more puts. And what does that do? Well, it means people are hedged to the downside, meaning if we go down further, they have less risk in their portfolio. And two, they might actually be betting that we're going to go down further and make money. That changes supply and demand of stock because there are fewer panic sellers in the market, and it sets up an amazing place to buy. Reason number 2, we think risk reward is attractive from here and we may have bottomed. Take a look at global long short ratio. It's the ratio of longs to shorts, and typically when this goes below 175%, it's an attractive time to buy the stock market. 2012, good time to buy. 2016, good time to buy. The COVID low here was just below 175%. Really great time to buy. You can see how crazy long we got into 21, which set up a negative time. And then here, this number got as low as we've seen it in recent history, which is typically a really attractive time to buy the market. The third factor we loved about the potential of the stock market making a bottom, this is the volume chart, and we want to see all of these things happen, but we want to see them happen with gusto, with a crescendo, and that means with a lot of volume so that folks actually moved the money and set themselves on the other side of the ledger. Look at this volume spike that happened recently. It is higher than the COVID volume spike. It is higher than any volume spike. This happened last week, and it shows that folks actually moved money on this with great veracity, which we think helps make a bottom. So I know what you're thinking. We called a short-term bottom, and short-term is such an undefined term. So let me try to better define it, right? Absent a new large negative catalyst is the way that I would say that. It's not a time frame. We're just waiting for something positive or negative to happen that is meaningful. And these little tariff things are not meaningful anymore unless they come in a grand scale. Now, other things can happen to the stock market, which would put this near-term low in jeopardy. But in general, we are talking about a near-term low, meaning without a new and large negative catalyst. Thanks again for watching this video and all of our videos. I think we have up to 60 now on our YouTube page, and they're starting to really take off. Folks are really giving us a lot of feedback. Hit us with anything that you guys want to see, and thanks so much. Subscribe, like, all that stuff. We appreciate it.